Forex Trading QuickStart Guide, the simplified beginner's guide to successfully swing and day trading the global foreign exchange market using proven currency techniques. QuickStart Guides, trademark, Finance. Written by Troy Noonan. Narrated by Mark Williams. Please note that your purchase of this audiobook includes a downloadable companion PDF containing all the figures and visual aids referenced throughout this audiobook. Your purchase of this audiobook also includes free lifetime access to the Digital Asset Vault, which contains supplemental resources that enhance the content of this audiobook and maximize the value of your purchase. We highly recommend accessing the companion PDF and digital assets for the best listening experience. Visit ClydeBankMedia.com/Forex-assets to access the vault and download your companion PDF and supplemental materials. Foreign exchange is one of the most exciting markets for traders. It is open nearly 24 hours during the week, and it is far more liquid than other financial markets. Every day, the world's governments, banks, businesses, and traders buy and sell currencies. Some are simply looking to buy and sell goods in different countries. Others are hedging risks or speculating on major changes in the market. To me, it doesn't matter why they are placing trades, only that they are trading. Their activities create opportunities for me and for you if you learn the techniques of how to effectively trade in this exciting market. In fact, the activity in the Forex markets creates profitable opportunities for the smallest of traders. The long opening hours make it accessible to traders who need flexibility. New traders can get started with relatively small amounts of initial capital and use leverage to build their accounts over time. I've been trading for close to 30 years. I've seen technologies change, currencies consolidate, and new assets emerge. The fundamentals don't change, though. The best traders pay attention to the basics and take the time to do the work before they start to trade. I've learned from them, and I want to pass that discipline on to you. My approach to trading is based on a straightforward idea. We need to win more than we lose. Otherwise, we just lose. As traders, we win by implementing techniques or trading methodologies, combined with trade plans using clear parameters that we have backtested, forward-tested, and practiced. Our backtests allow us to prove to ourselves that our trade plans will win more than 50% of the time. And I suggest supplementing winning techniques with smart money management and an understanding of key metrics like win rate, profit factor, expectancy risk-to-reward ratios, and others, trade by trade. Beyond that, we do nothing, absolutely nothing, but let the trade play out as it is supposed to. Believe it or not, the last part is the hardest to master. When I say we do nothing, I mean we don't get in our own way. Sounds easy enough, right? It's not. And you will soon learn there are 1,000,001 ways to get in your own way. To be successful, you have to shut out the noise, abandon the emotion, and just execute. The reason for trading is to make money. That's it. If you can begin to accept that now, your chances for success will grow. Again, it sounds easy. It's not. I know that you're ready to get started, but I hope you take the time to read through this book before you turn your hard-earned money over to a broker. Too many traders rush in without doing the work, and they do so to their detriment. The upfront work of reading books like this, cover to cover, and learning how to trade using a sim account, not real money. Committing to building a stronger trader foundation, which includes a good amount of backtesting so that you can develop winning trade plans, is what creates your edge in the market. Most traders don't take the time to study how to properly trade. They jump in unprepared and without a plan. One of the main reasons I'm writing this book is to prevent you from making that mistake. I want you to be prepared, ready, and determined to succeed. Who I am. I'm a California dude, through and through. I grew up here and love the climate, the beaches, and the mountains. I've taken to the culture, the laid-back hustle that goes on. People here work hard, but they also know how to have fun. Before I took up trading, I was ensconced in the music business. I played drums in a few rock bands, and I did event production on the jazz scene. As a musician, I understood that making music becomes more fun the better you are at it, and the only way to get better is to practice. As with drumming, the path to becoming a real winning trader is long and arduous. But for me, the payoff that makes it all worthwhile is that it has given me the means and the flexibility to enjoy the rest of my life. While I continue to trade, teach trading, and write books about trading like this one, I also continue to play drums and hang out with my friends and family, all while enjoying the financial fruits of my labors. My proficiencies in trading span the gamut from swing trades to day trades, from commodities futures to spot market trades in dented pizza sauce cans that fell off the forklift. I've done a lot of different things in life, but, for better or for worse, I can confidently say that there's nothing out there quite like Forex. It's the largest financial market, open nearly 24 hours a day during the week. Its hours are almost as nonstop as mine were when I was a professional musician. Forex is active, attracting banks, corporations, and individual traders. Great trading opportunities are simply among the byproducts of the Forex market's massive nonstop activity. I've always loved this market. In fact, it was my experience in the Forex market that altered my personal life forever, in a good way. The Great Pound Short, and how it changed my life. The story starts in 1991. That year, the British government joined the European Exchange Rate Mechanism, ERM. This was the predecessor to the European Union's single currency, the euro. Under the ERM, the central banks of European nations agreed to keep their exchange rates in tight ranges relative to the other European currencies. This reduction of exchange rate risk would make it easier for businesses to buy and sell goods across the continent. The Bank of England needed to keep interest rates high in order to maintain the agreed-upon exchange rate against the German mark. In 1992, George Soros, a hedge fund manager with a penchant for currency trading, noticed that this arrangement had created a problem for the British pound. It was overvalued relative to where it should have been based on the British economy. Soros started betting that the pound would fall in value, a process known as short selling in trader language. Over the summer of 1992, he built up a short position that was reported to be worth $10 billion. On September 16, 1992, the British government realized that it could not meet the standards it had agreed to. The Bank of England announced that it would be leaving the ERM. The next day, the pound fell by 15% against the German mark, and Soros made an estimated $1 billion in profit, a trade that would infamously become known as the trade that broke the Bank of England. Almost 30 years later, this Soros trade remains a legend in the currency markets. Soros's firm had an army of analysts who were able to look at the political and economic situation in Europe and then draw up a trade with little downside risk. Had Soros been wrong, the pound's exchange rate would have been almost exactly the same as it was when he opened the short position. In the worst case, then, he would have broken even. I was just beginning to trade Forex myself at the time of Soros's famous short, and by coincidence,
Sample complete. Ready to continue?